If you are a retail investor below the age of 40, you should not miss out on investing in these five instruments. Advisors, friends, and colleagues might have told you against investing in these instruments because of low returns or lock ins, but trust me, you will not regret investing your money in these instruments. Now, I am not against investing in equities, and I do believe that equities should be a major part of your portfolio, especially if you are below the age of 45 or 50. But 100% allocation to equities, even for your long term goals, is not correct. And when it comes to the long term, I believe that for a passive retail investor, debt funds can be quite complicated and won't even outperform some of the instruments that we will discuss now. Rank 5, the floating rate savings bond from RBI. These bonds offer you 35 basis points higher than the National Savings Scheme's interest rate. So if NSC offers 6.8% interest rate, then the floating rate savings bond from the RBI will offer you 7.15% per annum. The rate will get adjusted every 6 months. These bonds have a tenure of 7 years and cannot be sold or transferred before maturity. The interest will be paid every 6 months and you do not get an option of payment on a cumulative basis. Investments do not qualify for deduction under Section 80C and the returns are taxable as per your tax slab. This is a good option if your average tax rate is below 15%. For those with a higher tax rate, the returns would be subpar, not just because of higher tax, but also because the returns are on a simple interest basis. This bond is ideal for investors who need some regular income from their investments but want a higher rate of return than fixed deposits. On rank 4, we have the sovereign gold bonds by the RBI. These bonds are the perfect alternate to buying physical gold. You get a 2.5% per annum return on the amount invested apart from the returns from the price of gold. If held till maturity, that is 8 years, the returns are completely tax free. You can sell the bonds after the 5th year, but then your returns would get taxed. While some investors might not like investing in gold, the STBs can be a good inflation beating investment as gold has historically delivered inflation beating returns. Note, you do not get any ATC benefits for the investments made in the SGB. Rank 3, the National Savings Certificate. The NSC offers 6.8% per annum and the interest rate gets revised quarterly. Investments in NSC qualify for deduction under Section 80C, and the advantage is that the reinvestment of the interest also qualifies for ATC deduction. So whatever interest is accrued for financial year 20, it gets reinvested automatically and it gets eligible for deduction under Section 80C for FY21 as well. Now there is a lock-in of 5 years and in the end the returns will be taxable as per your applicable tax rate. As the lock-in is quite low, 5 years, and the interest rate is a bit higher than that from fixed deposits, NSC is a good option for investing for your midlife financial goals that are between 5 to 10 years away. On rank 2, I'll put the Public Provident Fund, or popularly known as the PPF. The PPF currently offers 7.1% per annum and is one of the best investment options out there. If you're not investing in PPF, you are missing out on one beautiful investment that is very safe and offers a return with absolutely no tax on it. Investments in PPF qualify for deduction under Section 80C and the returns on maturity are also tax free. The lock-in of 15 years is a bit of a dampener here, but this is what makes it a wonderful instrument to plan for your child's education and college, or your child's future wedding, or even your retirement. Rank 1, the Sukanya Samriddhi Yojna. The best investment option out there in India today is the Sukanya Samriddhi Yojna, in which you can invest only for your girl child. The lock-in is of 21 years, but you can withdraw up to 50% of the corpus for your daughter's marriage or higher education after she turns 18. You can start this investment on her name anytime before she turns 10. The interest rate is 7.6% per annum and gets revised every year. The investment in the SSY qualifies for deduction under Section 80C and the returns are completely tax-free. To put it in perspective, if you deposit rupees 1.5 lakhs every year for 15 years at the current 7.6% per annum, you will get rupees 65.93 lakhs tax-free after 21 years. So, to summarize, the five investments that we discussed as per my rankings are number 1, Sukanya Samriddhi Yojna, number 2, Public Provident Fund, number 3, National Savings Certificate, number 4, Sovereign Gold Bond, and number 5, the Floating Rate Savings Bond from the RBI. So, what do you think about these investments? And do you have any queries about the potential or the future outlook on these investments? Just drop in a comment and I will individually reply and try to help you out with it. Thank you.